Good morning, everyone. Hope you guys are doing well. Today is Tuesday, August the 18th. Overall markets yesterday, we ended up having memory pushing towards the upside. SPY and Qs were a little bit weaker, and currently in the pre-market, as you can see, we are gapping down here on both the SPY and the Qs. So coming to market open, just overall markets dropping. We are back down into a key level of support. We'll see if the markets do want to bounce coming into today. We have kind of the ongoing war tensions with the ceasefire that expired yesterday. So that's kind of ongoing looming news that we do have that's currently affecting the markets. We'll talk about that a little bit more here in a second. Yeah, with that being said, what's up, everyone? Good morning. Hope you guys are doing well. What's up, Knight? Good morning, Kelvin. TW. Good morning, Maria. Andy. Good morning, B Roots. Good morning, Wallace. J Tan. Lamit. What's up, everyone? Cinna, Gerald, Juan. Good morning, Robert, Deuce, Xenors, Julius. What's up, everyone? Andrea. What's up, Mani? What's up, everyone? Yeah, hope you guys are doing well. Let me pull up the economic calendar here and some of the news events that we had in the overnight session. So, as you can see here, the couple of things that we have coming into this week is going to be FOMC minutes. That's going to be tomorrow at 2 p.m. Eastern Standard Time. Yesterday, we did have the ceasefire expiring. It was extended. So, as you can see, some of the headlines that we have in the overnight session. Dow loses more than 270 points as oil prices pressure stocks amid rising Iran tensions. The main thing is we did have the ceasefire that was expiring on Monday, right? So we already extended it for 60 days. But as you can see, it expired Monday, and currently we're going to have the ongoing tensions currently. So with that being said, the overall market currently having an initial reaction off of that. We are still very much bullish here on the higher time frames, but we're just back down into key levels of support. If we're looking at the SPY, as you can see, we're currently bouncing here right off our key level of support. For the ES, similar thesis, we kind of went from our all-time highs back down into a key level of support, and now you can see we're right at this 77.20. So coming to market open here today, we'll just see if we can bounce. If we do get underneath, definitely could see a little bit of a bigger retracement here in the markets. So let's start off here on the SPY. If we're taking a look at this on the weekly time frame, or sorry, on the daily chart, you can see yesterday we got back underneath this previous all-time highs level. So now the next level that we mentioned that we do have is just going to be that higher low here on the daily time frame. So if you go back onto the hourly chart and mark out some of the levels that we have, key technical levels yesterday was at 775. Once we did break underneath that 775, you can see we end up having a pretty solid drop, quick drop down in towards our key levels of support. So for the SPY, pretty fast drop down in towards that 768. And now you can see this is where we're at currently here in the pre-market. So coming into today, we're just going to mark out that pre-market low. We're also going to mark out that 770. If we do want to see a mean reversion here in the markets back above that pre-market high for a pushback towards the upside, or now it's just going to be the bounce play here off our pre-market lows for a pushback up in towards our previous day close, which we are going to have a gap on the charts. The way we're interested in some downside is number one, either a pop and fade here off our pre-market highs for a push towards the downside, or now underneath our pre-market lows for a push towards the downside. So on the hourly time frame, this is a key level of support that I would like to see hold. So if we do get underneath that 768, we could see some downside, but after a big push down yesterday and a gap down, I'll be a little bit more cautious on the short side if we're taking a look at the ES here as well. Key technical levels that we have marked out is going to be that 7720 higher time frame level support. If you can maintain above this level, we can see this mean reversion back up in towards our previous day close. The only way I'm interested in downside here, as I mentioned, is if you get underneath that pre-market lows and underneath the 770.20, then we can see a bigger push towards the downside here in the overall markets. But currently in the pre-market, I would like to see now just the push back above. If you can get back above that pre-market high continuation, or now the bounce off that 77.20 for a push back towards the highs. If you take a look at the QQQ here, the Qs end up rejecting off our 734. Yesterday, the Qs was a little bit more bullish than the SPY, but now as you can see, now we're gapping down underneath that 728. This was a higher time frame level of support, and you can see kind of gapping down here, breaking underneath, and now we're back down in towards that 720. Hourly higher lows are still being built, so this is technically our hourly higher low for a pushback towards the upside. If we do break underneath, then we can see a push down in towards that 710. Key technical levels that we have marked out coming into today is going to be that 720. If we get underneath that 720 right off the bat, we can see that push towards the downside. Underneath that 720, we can see continuation down in towards that 716. If we come back down, buyers step in, then potentially we can see this mean reversion back up in towards our pre-market highs. If the first 5 minutes is bullish, then we can see a push back up in towards our previous day close. If you take a look at the NQ here, the key technical levels that we do have marked out is just going to be this 29,700. As you can see, this are key levels that basically bounced from last week. If buyers do want to step in, right, we can see that potential mean reversion back up in towards our 30,000. If we do get underneath that 29,700 today, we can see a retracement all the way back down in towards that 29,400. So for the Qs and the SPY, we're basically right at a key level support coming to market open. At least right off the bat, I am leaning slightly bearish just based off of yesterday's price action plus today's open, right? We're opening up closer to the key level support. If we do want to short, as I mentioned, underneath that 768 is going to be key for me. What I don't want to be caught in is, right, a push lower right off the bat and a potential bounce that is in play. So I would be cautious of this potential bounce right off our pre-market lows after this gap down. So if we do want to short, either we're looking for that pop and fade right off the bat to short down in towards that pre-market lows, or now we're just going to be waiting for the break underneath and hold for continuation towards the downside. Let's take a look at the SMH here. So some of the semiconductors were stronger yesterday, more so specific memory tickers. So as you can see for the SMH, higher lows were just being built and we end up pushing towards the upside. Now you can see we're gapping down roughly 3% here. So pretty big pullback in the pre-market on the semiconductors. We're underneath that previous day lows. We're now all the way back down into that 575 here on the higher time frame. So daily chart, now we did technically we didn't really have a strong candle close above that 590, but right now with us gapping down here, we want to see the reaction that we have really off the area that we broke out from. So key technical levels that we have marked out is going to be this 577. If you do want to see any sort of upside, the reclaim back above for potential bounce play back towards the upside. If we do hold now underneath this 577, the next level is going to be down in towards our 568 here on the higher time frame. So those are the key levels that we can have marked out on the SMH coming into market open. With us gapping down here, we're now going to use our pre-market levels, plus we're going to use that opening range once that is developed. If you take a look at DRAM, DRAM was by far the stronger ETF that we had. So yesterday we were bullish on memory, and you can see nice push towards the upside on a lot of these memory tickers. SNDKMU, right, continuation above our 59 key psych. So we end up having a nice really opening drive towards the upside above that 59. And now currently in the pre-market, we are having a pretty big pullback. So down about 5% on DRAM back into the area that we broke out from. So this is that flat top that we have. So for DRAM moving forward, we would like to see the bounce here off that 56 hourly double bottom for that continued pushback towards the upside. Key technical levels is really the area that we broke out from. So this is the exact level we want to see a bounce play for that pushback towards the upside. Another possible scenario above our pre-market high, we can see a pushback up in towards our 59.50. So keep an eye out for this here on DRAM. If we do break underneath, hold underneath that 56, then we can see a push down in towards 55 and below. But the semiconductors now, a lot of these names are pulling back, especially with the SPY and Qs. So coming to market open, we're going to be a little bit more patient and wait for names that do have any sort of relative strength. So with that being said, IWM, this one's still holding up nicely. This is retesting that flat top. So keep an eye on an IWM bounce off our 302. Or this one now break. Let's see if we can get that retest for that pushback towards the upside. So IWM right into a key technical level support. Let's see if buyers do want to step in here off that 303 for continuation higher. Underneath that 303 hold, push down in towards 302 and below. So keep an eye out for that on IWM. Now, with that being said, let's head on to some tech names that we have coming into today. Starting off with Tesla, and then we'll make our way down into a few other names. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, let's talk about Tesla. So this is the first name that we have marked out. What are the key levels? We can just mark this out right here, 340. You can see daily chart, a little bit of seller stepping in, wicking above it, but closing underneath that 340. If we're on the hourly time frame, the exact levels that we have marked out is kind of this 340 area. And then now we have our 335. So currently in the pre-market, we are underneath that previous day lows along with most of the tickers here. This is the area that we bounced from, where we broke out from. So for Tesla, coming into today, this is kind of the exact area. The hourly time frame is going to be the best go-to on most of these tickers. Key level that we have is going to be that 335. If you do want to see a potential bounce, maintain above that 335 for a push back up into that 340. Underneath that 335 now, we can see a retracement back down in towards that 330 and below, which would be that 336. So with us currently kind of rejecting here off that 340 key pivot point after that earnings drop here as well, we could very much well potentially shift structure here on the hourly chart for a pushback towards the downside. So underneath that 335, we can see a retracement, but if we do hold, we can see that reclaim back up into that 340. As for AMD, AMD was fairly bullish yesterday in the pre-market. By the time pre-market opened, this one ended up pulling back underneath that previous day highs. So for AMD, now currently we're back underneath that 500. So on Friday, we end up having a nice push towards the upside. Yesterday, we're kind of right around that previous day highs, was not able to get above that previous day highs and rejected. And currently we're pulling back, and now we're underneath that 500. So for AMD, the key level that we have moving forward is going to be this 500 key psych, with us currently breaking back underneath. If we maintain underneath that 500, we're just going to see a pushback down into that 480 and potentially below, which is that 470 here on the higher time frames. If we can reclaim back above that 500, potentially you can see a mini mean reversion for a pushback up into that 505. So for AMD today, we're well underneath that previous day lows. Keep an eye on that 495 coming into market open. As for NVIDIA, this one is still bullish here on the daily chart. This is technically going to be one of our first pullbacks as well. So keep an eye out on NVIDIA here. As long as we maintain above our 212, we're bullish here. Preferably just build up a higher low on the daily time frame for a push back up into that 228 along with that all-time highs. We could even pull back down into that 212, and technically the structure would still be bullish on Nvidia as well. If we're taking a look at the hourly time frame, we did break underneath one of our main levels, which was that 222. As you can see, higher lows. This is the exact higher low level I want to see hold for continuation higher. Currently, we're underneath it in the pre-market. So a lot of these tickers, most likely now, we're going to come back down for that double bottom. So instead of building that higher low on the daily time frame, most likely now just going to come back down for that double bottom and push back towards the upside. So long scenarios back above our pre-market highs, push back towards the upside, or it can come all the way back down into that 218, bounce off that level for a pushback towards the upside. Shorts are in play today for a potential pop and fade, or now underneath that 218 for a continued pushback towards the downside. A lot of these ones right now, after pulling back, we're going to mark out that pre-market highs, and that's going to be key. As for Apple, you can see we're bouncing off our key level of support, which is at 302. Apple is one of the only tickers that is bullish currently in the pre-market. We are above our previous day high, so Apple is something we can keep an eye out for today. Above our previous day highs, potential pushback towards the upside. Key technical levels that we have marked out. Main level is just going to be that previous day highs. So above our previous day highs hold, potential room up and towards that 310. If we get back underneath that previous day highs, we're just going to see a push right back towards the downside. So Apple, will keep an eye on that previous day highs coming into market open. 307 is going to be our key level coming into today. As for Google, right back down into a key level support. We'll see if any buyers do want to step in for a potential pushback towards the upside. So Google, keep an eye on that previous day lows. That's going to be key. A reclaim back above, potential move higher, a rejection, push right back towards the downside. Yeah, Apple, the past couple months, Apple really has been doing kind of the opposite of the overall markets. Whenever the market drops, Apple rises. Whenever Apple rises, usually the market drops. MBIS does look really good as well. As for Microsoft, this one is pulling back. On the daily time frame, higher lows are still being intact. So for Microsoft, as long as you maintain above that 470, we also have that daily gap here as well. So maintain above their daily gap for continuation, or fill that daily gap and push back towards the upside. Key levels that we have marked out on Microsoft now is just going to be that previous day lows. We can mark out this level here as well. So for Microsoft today, if we're taking a look at this hourly time frame, there's really two scenarios. Either the hold of that 480, potential room back towards the upside. We have the break above our pre-market high for a push back up into that 490. Or of course, if we do get underneath that previous day lows, in the higher time frame key level will be that 468 for a bounce play back towards the upside. So that's what we have on Microsoft coming into market open. If we take a look at Meta, this one is pulling back now, kind of rejecting off that 600 underneath that previous day lows. This one now going to come back into the area that we broke out from, which is that 560. But for Meta, underneath that previous day lows, kind of rejected pretty aggressively right off the bat. And we end up having a weak candle closure on the daily time frame as well. So for Meta now, we just want to see if any buyers do want to step in off that 560, potential mini bounce coming into market open for a pushback towards the upside. Amazon is now back down into our key level support. So let's keep an eye on Amazon today for a potential bounce off that 256 for a move back towards the upside. That's our daily gap plus our previous level of resistance. Now we like to see turn into support. For Amazon, key technical levels that we do have marked out is at 258. So far you can see buyers are stepping in above that area. Now what we like to see is above our 262 for any sort of continuation back towards the upside. If we do reject, we're going to see a push right back down in towards that 258 here on Amazon. As for Netflix, this one I do like. Higher time frames are still above that 76. Let's see if we can make a daily higher low for a push right back towards the upside. Key levels that we do have marked out is just going to be, if we're on the hourly time frame, is going to be that 76. You can see the hourly is building up higher lows. Let's keep an eye out on Netflix bounce off our 76 for continuation back towards the upside. As for SpaceX, this one built that hourly higher low and pushed up in towards that 150. But this is a higher time frame level of support. We did reject off this level already once. You can see so far sellers are stepping in here once again. And now you can see we are pulling back. So for SpaceX, higher lows are very much well still intact here. Now we like to see really maintain above this 140, preferably above this 144 for a pushback towards the upside. If we're on the 15-minute time frame, our key level that we have marked out 144. So break back above that 144, push back up into that previous day close. Underneath that 144, we can see a push down into that 140 here on the higher time frames. So coming to market open with the semis and with the overall markets kind of pulling back here, SPY kind of right around this pre-market high. A lot of names are definitely weaker today. Not too many names are bullish, really, besides Apple here. That's the only one that's close to our previous day highs. The rest of the names are either underneath our previous day lows or inside the middle of the range. So we're definitely going to be more cautious on the upside today. All the names would definitely be more so just a bounce play off our key level support and a reclaim setup. We'd have to get back above our pre-market highs at a minimum on something like the SPY. So with that being said, let's take a look at some other tickers that we do have. There are a few tickers. As you can see, a lot of memory was bullish. MU, SNDK, WDC, DRAM was fairly bullish yesterday, but these ones, of course, are pulling back in the pre-market. If you guys do have any charts that you'd like me to go over here now, you guys can drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. So what are some names that I do like? Something like Palantir. This one has been consolidating as of recent after we had that earnings move. You can see as of late, we've just been consolidating in between that 170 along with our 180. The major levels that we have marked out are these exact levels, right? 170 along with our 180. On the hourly time frame, this is our exact kind of bounce that we want to see. As long as we maintain above that 170, continuation back towards the upside here is in play. Now for Palantir, another possible scenario, at least for this morning, right? We either have that previous day low reclaim for a push back towards the upside or the bounce off for 170 for a push back towards the highs here as well. MU. So MU and a lot of these tickers, as you can see, we're pulling back in the pre-market, right? MU had a nice push, reclaim back above 1,000. SNDK, nice push towards the upside here as well. But these ones are pulling back more so on the hourly time frame. The daily chart, we had a nice push up in towards our key technical levels, right? 1,000 kind of key area. SNDK back above our 1,700. So for something like MU, our key area now is really the area that we broke out from, which is that 920. So if you go back onto the hourly time frame, the major level that we have marked out is the 920. This is the area that we broke out from, consolidation, flat top, broke above, continuation towards the upside. It does seem like now for MU, if we can't reclaim back above this 980, most likely we are going to actually pull back down into that 920. And this is going to be that next level support, right? Higher time frame, key technical level. So for MU, some of the levels that we have marked out, we can mark out that previous day lows. Sorry, not our previous day lows. We can mark out that 960 pre-market lows, key level here from Friday. If we reject off our 980, which we're currently trying to do right now, we can see a push down into that 960. If we do get underneath that 960 hold, then our next level is going to be down into that 930 along with that 920. If we do want to see a MU bounce, either the reclaim back above that 980, or now it's going to be the bounce here off our 960 for potential mean reversion back towards the upside. So let's keep an eye out on that previous low that we created here on Friday. SNDK, similar thesis here as well. SNDK is a little bit more bullish than MU. Major level is just going to be that previous day lows. Let's keep an eye out on an SNDK bounce here off our 1650 for a push back towards the upside. SNDK, as you can see, we end up having that nice push back above. Now we're coming back down. This is our key level of resistance. Let's see if we can hold this level for a push back towards the upside. If we get underneath, then you can see this can be a potential fake out, and we can see this reversion, mean reversion back towards the downside. So keep an eye out on that 1650 here on SNDK. INTC back underneath that 104. This one's back into a key level support. Keep an eye on that bounce here off our 98 for potential mean reversion back towards the upside. WDC, this one pulling back here as well. Key level that we had was our earnings high. So that was one of the main levels that we have marked out. You can see a little bit of sellers kind of stepping in right off that earnings high on WDC. We can just kind of refine this. But for WDC, nice push up into that earnings high, a little bit of rejection. Now the key level is going to be that 5. It's going to be that 500 key psych here on WDC. So key level here today, potential bounce play for a move back towards the upside is in play. Underneath that 500 key psych, room down in towards that 490. SK Hynix, a lot of these ones underneath that previous day lows, underneath our key technical levels here as well. This one's back underneath that IPO low. So the key level is just going to be that 168 here on SK Hynix. MRVL, a lot of these ones, as you can see, had a nice push, decent candle close yesterday, but of course, with the overall markets pulling back, these ones are gapping down. So it's going to be quite difficult for a bounce play. Or at least continuation towards the upside today. A lot of these ones would just be a bounce off our previous, or kind of a reclaim setup for a pushback towards the upside. A name that is holding up very strong is NBIS. This one, if we're looking at this one on the hourly time frame, we did have earnings last week. You can see buyers are stepping in here off that 260 in the pre-market, above our 260 continuation, above now that 280 push up in towards that all-time highs here is in play. So if anything does want to run today, it is going to be NBIS. This one is bullish on the hourly time frame. Above our 280 is going to be key for continuation higher. Or now, as I mentioned, that bounce play here off that 260, which we're currently doing here in the pre-market. So keep an eye out on NBIS above that 280. As for a few other tickers, let me take a look at Qualcomm. Qualcomm and a lot of these ones pulling back, kind of building this flag pattern, but now we're kind of breaking it towards the downside. So a little bit more weaker. I would be a little bit more cautious on Qualcomm, something like ARM here as well. We had this downtrend break, but we're kind of breaking underneath our key level support. We could still build a daily higher low here, but we do want to be cautious. We'd like to see that reclaim today, right? This is our earnings high. You can see how many touches we've had here. So we'd like to see that reclaim back above if you want to see any sort of push, right? The daily time frame basically has to close bullish on something like an ARM. Let's take a look at a couple other tickers. Let's take a look at Light. Light's still holding up. Yeah, daily time frame, weekly chart looks good here as well. The key levels that we have on the daily now is really this area, the area that we broke out from. As long as you can maintain above that 880, continuation back towards the upside. The key levels is going to be that earnings high. So we can mark out that earnings, or kind of this general area. So we have our 920. Other levels that we have marked out is this earnings low, which is at 800. So for Light, we would now like to see it back above 920 for continuation back towards the upside. Okay, let's go over a couple more tickers here today. As I mentioned, today now with the overall markets pulling back, we definitely do have to be cautious. It seems like we're dropping once again here in the pre-market. So at least for today, I'm going to be a little bit more hands-off. If you are interested in shorts, you would have to go for a more aggressive entry right off the bat, like a pop and fade. I'm not as interested in shorting right into a key level support. So right now, it doesn't make too much sense to short right into this key level because we very much well could bounce and we can see this mean reversion back towards the upside. I'm more so interested in shorting underneath our 7720. If we can get underneath on the lower time frames and flip, then I'm interested for a pushback towards the lows, right? There's a lot of room on the downside, so I'm not opposed to waiting a little bit, just because you can see we have a lot of room on the ES towards the lows. So if we wait for a little bit extra confirmation, right, there's a lot of room down in towards the next kind of major level is that 7660. If we're on the SPY chart, similar thesis, really the next level is kind of all the way back down into that previous day highs, or sorry, that previous all-time highs. So if we do break underneath our 768, there's a lot of room technically back down into that 760. So we don't have to be the first people to short, at least right off the bat. So you're either going to look for a very aggressive entry, or you're going to be a little bit more patient and then wait for the break underneath that 768. We could bounce here. So that's the thing about the SPY, is that we could bounce off our key level of support and we could see this mean reversion. So we are still above key technical levels here. But if we do break underneath that 768 today, then we have a lot of room back down into that previous all-time highs. So at least right off the bat, with us gapping down here, I'm going to be a little bit more patient. I just want to see the reaction that we have off that 768. It's just going to be based off key technical levels this morning. If we bounce, then we can be looking for this mean reversion back towards the upside. If the markets do want to stay heavy and break underneath and hold, then we could be looking for some more downside underneath that 768 coming into market open here. So that's going to be the game plan here today. SPY is at a key technical level. As for the rest of the tickers, a lot of these ones, right, something like an AMD, we're just going to base it all off of intraday price action, most likely coming into market open. If we reject off key levels, we can look for the flip for a pushback towards the downside, right? Same thing with NVIDIA here as well. The main thing is just the SPY, right? If the SPY breaks underneath, we're going to see the whole market push towards the downside. If the SPY bounces coming to market open, then we're going to see a mean reversion back up in towards that 772. So the main thing is just this Qs coming into the SPY and Qs coming to market open. So I just want to see the reaction really now off our pre-market highs and our higher time frame level of support coming into today. And yeah, besides that, at least for the semis, yesterday we had the memory names that were more bullish, but now with these ones pulling back, we're going to be a little bit more patient. Really, the main watch is going to be NBIS. I do like this one above our pre-market highs for continuation, or even this bounce play coming to market open. Besides that, we'll keep an eye out on Palantir here as well. So that's what we have coming into market open here today. As for everything else, yeah, be a little bit more patient. Apple potentially above our previous day highs for continuation coming into market open. And then the rest of the tickers, yeah, really more so in between the middle of the range. So for me today, at least, don't really have any main watches towards the upside. As for the downside, we can just keep an eye out on the SPY underneath that 768. So we're going to keep an eye on the reaction that we have off key levels. Isn't the NQ and ES? They're all the same thing, right? They're all derived off that S&P 500 or the NASDAQ. The SPY and Qs both track the exact same thing. So you can look at the SPY, or you can look at the ES. But yeah, that's going to be it for me today. As I mentioned today, you want to be a little bit cautious. Especially with us dropping here, be open to playing both sides. Don't have an overly bias, right? Don't just based off this pre-market action and yesterday's price action. Don't be overly biased towards the downside and like short aggressively. If we do break underneath, then right, clear shorts towards the downside. If we come back down and buyers step in aggressively, right, potentially you can see a mean reversion. Obviously, based off this intraday price action so far, we are going to be leaning a little bit more towards the downside, but just be cautious because we could see a potential bounce coming into market open. Yeah, that's going to be it for me today. I'm going to get ready for market open here now. Hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. And if you guys haven't joined the free daily watch list, that of course is in the description below. With that being said, I'll see you guys all tomorrow. All right, take care, everyone. Peace.